Today, I'm going to blow your mind by showing you 5 ETFs that all pay dividends each month at extremely high rates, with one ETF currently yielding over 75%. I'm going to explain exactly how each of these funds make money, how they're able to pay out such high dividends, and what the risk of owning these funds are. And make sure you watch all the way through to the end of this video, because I'm going to show you a little secret that I found that I have not heard anyone talking about that I think other dividend investors would love to know. Let's jump right in and get started with the strategy. So how are they able to do this? How can these funds pay out such high dividends? At this point, a lot of you are probably familiar with covered call ETFs like JEPI, JEPQ, QYLD, RYLD, etc. They buy index funds like the S&P 500 or the NASDAQ, and they sell at the money call options to generate income for the fund. And they're called covered call ETFs because when you own the stock that you're selling call options against, it's called a covered call. And most of these funds yield about 10% dividend. But within the last year, a group of ETFs under the brand name YieldMax hit the stock market, offering dividends from 25% all the way up to 75%. That completely dominates any covered call ETF on the market today. What YieldMax did was take the covered call strategy and supercharge the returns by changing it into what's commonly known as a synthetic covered call. And I have a video about how to execute a synthetic covered call on your own, but essentially what it is instead of actually buying the shares and then selling calls against those shares, you buy LEAP options, long expiration anticipated securities, which are basically just call options that expire a year or so out. LEAP call options allow you to mimic owning the stock, but for a fraction of the price. Basically gives you leverage like you would have in real estate. You can think of it like buying a rental house, and funds like JEPI and RYLD, they're putting all cash down and then just collecting rent. But what these YieldMax funds are doing is they're putting 10 to 15% down and then collecting rent on just that down payment, which really supercharges your cash on cash returns. But like everything in life, with more leverage comes more reward, but also more risk. If stock prices do fall, those LEAP call options lose value exponentially faster than just the stock itself. And all 5 of the YieldMax ETFs I'm about to show you follow this same synthetic covered call strategy. All right, number 5 on my list is APLY, the YieldMax Apple Option Income Strategy ETF. This ETF only trades Apple options, the biggest computer maker in the world. Everyone knows the company, AAPL. They just buy and sell Apple call options. So APLY is currently trading at $22.20. It's got total net assets of $30.52 million. That's how much is in the fund. It's got a gross expense ratio of 0.99%. So all these YieldMax funds have the same gross expense ratio. And the current estimated distribution rate is 34.22%. And the 30-day SEC yield is 3.53%, which is how much the fund returned excluding dividends. So that number doesn't account for any dividends, which is the majority of the income that you're going to be getting from this fund. You're not going to get much share price appreciation. So I wanted to look at the share price over the past year. This chart really doesn't begin until April 18th, which is about 3 months ago. And you can see that it's gone from a share price of around $20 up to $22. So not much variability here, but it has only existed during a bull market run for Apple stock. And so far, this ETF has only paid out 2 monthly dividends, right? It's only 4 months old. So the most recent dividend in July was 63 cents. And then in June, they paid 28 cents. So that 34% estimated dividend yield is based if they would keep paying out 63 cents every month. But you can see that obviously this distribution is going to fluctuate with how much money they make from selling covered calls. And now we're going to take a look at the top 10 holdings in the fund. So you can see that approximately 84% of this fund is actually in US Treasury bonds. So they only trade with a small amount of the total money in the fund. All right, next up, my number 4 ETF from YieldMax is NVDY, which is the NVDY Option Income Strategy ETF. This fund is the same thing. It's a synthetic covered call options trading strategy that's all based on the stock NVIDIA. So NVDY has a current share price of $22.74. Net assets, it has about $52.3 million in the fund. The gross expense ratio, same thing, 0.99%, and an estimated distribution rate of 50.53%, with a 30-day SEC yield, so just the gains on the stock price, at 3.8%. If we take a look at the price chart, you can see that this fund is even newer than the last fund. Its first day of trading was May 11th, 2023, so it's been on the market for just a little over 2 months, and it's had pretty decent share price appreciation. But again, this is at the same time that NVDY, the stock that this is based against, has also appreciated in price. And if we take a look at the distribution history, you can see this fund has paid out 2 dividends so far, same thing as APLY. The first month in June, they had a 74-cent dividend, and then last month in July, they had a 95-cent dividend. So far, really promising results from this ETF, but it'll be interesting to see how it performs if the share price of NVIDIA drops. And if we take a look at the top 10 holdings, they only trade with about 6 or 7% of the actual money in the fund. So they have about 6% in call options on NVIDIA expiring 6 to 8 weeks out. Then they're short various call options, all expiring, sometime this month, some expiring in a week, some expiring in 3 weeks. And they also have 10% in cash. So quite a bit of the fund is actually in US Treasuries and cash. And they're also short NVIDIA put. So not only do they buy call options, they also sell put options, same thing as the last fund. So they have about 1,200 short puts. All right, next up, my number 3 YieldMax fund is AMZY. And this is the YieldMax Amazon Option Income Strategy ETF. Same thing as the last two. This one's just based on Amazon stock, right? The company Amazon that does everything that we use every day. This one is brand new. It only came out a little over a week before I filmed this video. They haven't paid any distributions yet, but I do like the fact that it's based on Amazon stock. So the current share price of this one is $19.93. It's got net assets of about $8.5 million that have rolled into this fund during the first week. Gross expense ratio is all the same, 0.99%. This fund does not have an estimated distribution rate yet or a 30-day SEC yield. But it should start paying dividends as of, I'm going to guess, around August 7th is usually when they declare the dividend, and it pays August 17th. So it hasn't quite had a full month yet even then, so it might wait until the next month. So we might not see the first dividend on this until September. But I'm estimating it's going to be around the 30% yield range, similar to a lot of these other ETFs. If we look at the top 10 holdings, you can see not as much treasury bonds in this one. They have about 20% in treasury bonds. 76% is still in cash, so they haven't even invested a lot of the money that they got yet. About 7% in call options expiring 6 to 8 weeks out, and then various other short puts and short call options, all on Amazon. All right, next up, my number 2 YieldMax ETF is OARK, which is the ARK Innovation Option Income Strategy ETF. This is based on the ARK Innovation ETF from Kathy Woods that invests in companies like Tesla, Coinbase, things like that. So the current share price of this one is $16.61. The net assets are $56.88 million. So this one's pretty big. The gross expense ratio, same thing, 0.99%. And this one's got an estimated distribution rate of 40% with a 30-day SEC yield of 3.73%. Remember that SEC yield doesn't account for dividend income. And if we take a look at the chart, you can see that it is down from a high of about $21, and it did go all the way down below $15, almost touched $14, and it's kind of slowly climbed back up over the past couple months. This ETF came online in December of 2022, so it's had about 7 to 8 months of history here. So you can see there's definitely some price fluctuation more than we saw on the other graphs that we looked at. Let's take a look at the dividend history. So you can see in Q1 of 2023, they paid $2.60 in dividends total, right? So that's 3 dividends over the course of the month. And then Q2, they paid $1.38. And then in Q3 so far, they've only paid one 55-cent dividend. So you get dividends every month. And over the history, they've ranged from a low of 36 cents to a high of $1.09. So quite a range there. So not the most reliable income, but the yield is still pretty high. And if we look at the top 10 holdings, quite a bit of this fund, about 90% of it is in US Treasury bonds, cash about 8%, right? But not exactly, because we do have some short shares here. They have about 5% in 6 to 8 weeks expiring Apple call options. They also have various other short call options expiring, some in less than a week from today, some 3 or 4 weeks from today. And my number one YieldMax ETF is TSLY, which is the Tesla Option Income Strategy ETF. And this is the same thing as synthetic covered call ETF, but it's all based on Tesla stock. So you get that sweet, juicy Tesla option premiums. The current share price is $16.29. The net assets are $369.28 million. So this one is so much bigger, 10 times bigger almost than the rest of the funds that we looked at. The gross expense ratio is still 0.99%. And this right here is probably why the fund is so much bigger. It has an estimated distribution rate of 78.55% and a 30-day SEC yield of 3.9%. So it's actually gone up in the past month, and it's got an incredibly high distribution rate. Due to how volatile Tesla stock is, the options are priced higher. So if you're short options, you can make more money, but we're also long options. So this one is definitely higher risk, but higher reward. And lately it's been mostly reward. Let's jump over to the share price. So you can see this one dates back to December of 2022, and it is down quite a bit. So it was around $21 and then dropped all the way down to $12. So you would have lost about 50% of your initial investment at some point, but it's climbed back up to in the $16 range. If we take a look at the distribution history, you can see in Q1 of 2023, it paid out $2.80 in dividends. Q2, it paid out about just over $2 in dividends. And so far this quarter, it's made one distribution and it's paid $1.06. So the distributions have ranged from 44 cents in May of 2023 up to the high. The most recent dividend in July was the highest one at $1.06. But average, you're looking a little bit closer to around that 90-cent mark. You can see the first 4 distributions were 99 cents, 90 cents, 90 cents, 82 cents, and then it dropped down to that 44 cent one. And if we look at the top holdings, you can see that they have quite a bit of the fund in US Treasury bonds, also a lot of it in cash, about 7% in cash. They have Tesla call options expiring in like 6 to 8 weeks. 4% of the fund is in that. They're also short Tesla puts down at the bottoms. They're also short various other Tesla calls, some expiring a week, some expiring in 2 weeks. So kind of same thing that we've seen across all these other YieldMax funds. Same strategy, long calls, short puts, and also short calls, with the majority of the money in cash or treasury. Now that I've shown you all 5 of my favorite YieldMax ETFs, time for my secret reveal. So I've been buying these ETFs for a few months now, but I was researching them for this video to find out a little bit more, and I made a shocking discovery. On May 31st of 2023, Title Trust, the management company behind YieldMax, filed with the SEC, the Securities and Exchange Commission, to add 10 new ETFs to the market. And here's all the tickers that they plan on releasing. You've got a MicroStrategy ETF, an Alibaba ETF, Airbnb ETF, AMD Advanced Micro Devices ETF, Moderna ETF, PayPal, Disney, JP Morgan, Microsoft, ExxonMobil. These are all synthetic covered call ETFs. And if you read the details of the filings, they show that each one of these new ETFs will follow the same synthetic covered call strategy, but on different tickers. So if you're a fan of high yield income ETFs, there's a lot more coming your way soon. I also put a link to the SEC filing in the description if you want to go read it yourself. All right, that's it. And thanks for watching, everyone. I hope you enjoyed this video. And as always, my financial advice disclaimer, this is not financial advice. I am not a financial advisor. This is not a recommendation to buy a security. I'm showing you what I found through my research, and you should certainly do your own research as well.